Okay, so as I said, what makes trades even higher probability is whenever the equal highs or lows are part of the trade idea. So coming down, and I'm not going to go into detail why price came to this level, but in general, one of the main reversal indicators I look for is equal highs and lows, because if we've made equal highs, it's like a fair value gap where, say this even wasn't a fair value gap in the first place, you have to question, like, why did price stop specifically at these levels? So that's why I'm looking at, I might want to take a trade to the opposite direction. So all we're waiting for is for, again, gaps to be disrespected. So we'll just keep on the indicator. Now the indicator is recommended for the 15-second time frame, because sometimes it's very hard to read candles on gold futures, for example, but on XAU it's a lot smoother candles to read, but the same trade won't be called at the same time all of the time, so you'd have to switch between the forex chart and the futures chart if you're trading gold. But anyway, so we clearly have these two gaps here. I'm not going to draw them super accurately, but we're just using that as a guide. So we have equal highs. So that's already indicated our sell-off. So technically you could just take a trade as soon as that candle went and made that. That's sometimes what I do because it's a strong reversal model. So here you could have got your 5 points. And again, with a stop at just resting above this, you're risking 1 point. So why trade one mini? Why not trade three and end up making $1,500? You know, this is why going by your own collected data to determine the average stop loss will determine how much size you want to put on a trade. Again, if you have a 70% win rate on gold, for example, and you know 5 is the max, but you can quickly trail down your stops. And especially if you're doing like a 1 to 2, as long as you like keep an eye on the actual price action of the candles, like consolidation here is not really good. We want to see, you know, this type of thing when we enter a trade. So maybe you want to get out at break even or just close out at 2 points. That's still 400 or 600. And you could have made that in literally a minute. So obviously consolidation on a lower time frame is less concerning than it is being on like a 5 minute or 1 minute. If it takes like 2 hours and it's just going sideways, then either go at break even or take a small loss, or just take whatever the market gives you at the time. But yeah, so now equal highs have been made. This is going to be a strong target for later. So all you have to do now is just wait for an opportunity to present itself. So if we just play out next candles. Now on the 15-second and 30-second time frame, what happens? We make new equal lows. So to me, that would signify, okay, if I was in that trade, as soon as I see an equal high or low get made, I'm either going to cut my risk to break even or I'm just going to pull out. Again, that's what she said, for whatever it gives me. And if you get money or you get a baby, you just have to deal with the consequences of maybe that baby turn into another millionaire. I don't know where I'm going with that. Let's carry on. Anyway, the indicator for the last 3 weeks, whenever equal highs and lows have been made, so we want an equal high to be swept, primarily like go down, or just use it as a reversal signal. And then if we were to going up, we would want equal lows to be taken, but again, equal low at this trade idea in time. Since we're only looking for around 5 points, we can be content with that trade, especially if you're sizing up. So now we start getting displacement candles. Now, And get rid of these. That one, the fifth, sorry, on the wrong one. Spoiler alert. So these were the gaps that we'd marked out on the 15-second. So again, entry signal 1 or indication is now new equal lows. Now obviously this could be ran. So if it ran, maybe we wouldn't be looking for buys. We might still be looking for continuations lower if price started to trade lower. You have to make that decision. And that's where the continuation FVG comes into play. We want to see the gap that we're taking to the opposite side be respected. So if we are taking a bullish setup, we want a bearish gap to be disrespected and the new bullish gap to be respected. And that's where your entry comes from. And vice versa if you're looking for the opposite way. So for here, we're looking for buys because equal highs is a good target to take. We want to see bearish gaps get filled and disrespected. And especially when you get a nice displacement candle like this that has a new gap formed with it, especially now with equal lows, we can just literally take this trade. We don't need to wait for the swing method because potentially you'll get a lesser entry. And obviously if your risk to reward is greater than your valid stop, which would be under the equal low or under the displacement candle, then I wouldn't take the trade. But again, 5 points is all the way down here. It's a bit overkill. So let's just go for 3. So at least getting a 1-to-1 or in this case 1.5. And we're targeting this equal high. So we've taken our entry. Next candle taps in. Next candle taps in. Next candle taps in. Now again, if you were doing the swing point method, which is key, but not, 100%, it just lessens the probability if this swing gets taken, because this swing point was made from this fair value gap. So that's where our level is. So we want the next candle to close above these levels, hopefully, without taking it. So we get it there. So there's our other entry if you wasn't comfortable on taking it there. So we can just play this out. Again, we're only targeting that. So we're still over a 1-to-1 risk to reward, which is good. And then we just play it out. Now watch what happens when equal highs get taken. We now start to displace to the low, to the sell side, because now we have this equal low. Now it's rare that this will happen like right next to each other, but if I wasn't showing my friend how this worked future, I could have taken these trades in real time. So we'll just go back to there. And again, as I said, we want, if we're targeting buy side, ideally I want a fair value gap to be made just before the hunt for liquidity is over. So I want to see a bullish gap created towards this equal high. So here we go. It takes it. Now, again, to confirm the change in the state of delivery, we don't want to see higher prices. We don't want candles to come down into the gap and then trade up. We want this gap to be specifically rejected. So what we've got to do now is wait. And plus, we're still delivering from all these gaps as well. So the fact that this is also holding price, these smaller gaps. And now the indicator didn't call the shot on here, but again, if you know the model, you're just going by this in the first place. So there's our inversion. Now I trade inversion models too, which is another thing I can get into if you want to ask me in Discord, where basically we have 1, 2, 3 candles. We mark out the body of the first candle that made the gap, and we want the inversion candles to close below this gap. If it closes down here, then it lessens the probability just like it is when the swing point gets taken. So you can take the trade here, or you can wait to see if any new gaps get made and respected. But you'll get potentially a lesser entry, but it's the safer one. So we're trading that actually inversed. So yeah, so you wouldn't even get a continuation here, but this is why I have two models. But the main model you want to be looking for is what the indicator is calling, which is the continuation. Here is an inverse and it didn't call it. So if we take the trade here, we're now targeting equal lows. And when we get halfway to target, we can potentially go break even. And then we just play this out. And this actually ran a lot more. So this one actually ran 8.5 points, which again, look at the risk to reward. Half a point on this case. And even here, the most we were risking was not even 1 point. So that's why I'm saying, again, data is more important. If you know what your average stop loss is for the type of trades you take, then you can always go bigger sizes. And especially on evaluations, just go full port at that point if you trust the data. But again, you lot will be taking these trades now, so hopefully you'll get your own data and see if it works for you. So that's it. In the Discord, there will be some screenshots of trades that worked. But like I say, these two models work the best. Again, following the rules that I have stated. Have your targets marked out. And then just follow these simple steps. 15-minute lower highs swept. Optional, we have equal lows created, like what we did there. We had equal highs created, plus whatever sweep, and then delivery potentially off a higher gap. Those three things combined is all you pretty much need to look for. If you know what the liquidity level is on the 15-minute swing, then that'll just further imply a better trade. But the 15-minute time frame is honestly the most goated time frame for scalpers. You don't need to worry too much about the 1 hour, 4 hour, unless you're marking unmitigated gaps, because as I showed on the previous trade example, that 15-minute gap was unmitigated until it got touched. And now it's weakened, so there's no reason. And normally what happens is with unmitigated gaps is they'll stay mitigated for a while. So that is what drove price up, along with sweeping that previous session low. But yeah, if there's any other questions, because I don't know how good I am at teaching this shit, obviously just hit me up in Discord. Fox7 out.